Good morning, everyone. Today we'll be presenting about Panasonic Berhad, and this is my group members. These are the parts that we'll be presenting about. This is the intro of the company. In 1918, the company was created by Kansuki Matsushi. They sell electric light sockets and plugs. In 1935, the company has overgrown and they have different electrical product categories. In 1930s, they started selling irons, phonographs, and light bulbs. In 1950s, they have products like transistor radios, TVs, tape recorders, stereo, and stereo equipment. In 1965, Panasonic Malaysia Berhad was created in Shah Alam.
Good morning, Miss Liu. My name is Ng Xueqing. Now I am talk about the Part B accounting standard. First, property, plant and equipment is one of the accounting standard. So you can look at this picture is the annual report for property, plant and equipment. The company total accumulated depreciation have increased from 404,592,000 ringgit to 440,072,000. The accumulated depreciation have include building, plant and machinery, furniture and so on. Besides, the total accumulated depreciation increased from 50,987,000 ringgit in 2020 years to 52,378,000 ringgit in 2021 years as the building depreciation. So the conclusion is the property, plant and equipment have increased from 127,306,000 in 2020 years to 138,175,000 ringgit in 2021 years. That means property, plant and equipment have increased 10,869,000 in property, plant and equipment. So this is the positive proportion of 8.54%. Besides, provision for liability and charges is the accounting standard. So you can look at this picture is the annual report for provision for liability and charges. The company total provision for liability and charges have decreased from 12,132,000 ringgit in 2020 years to 6,145,000 ringgit in 2021 years. The overall provision for liability and charges include the reward and recall costs, warranty, employee welfare fund, and so on. Besides, the total provision for liability and charges decreased from 7,046,000 in 2020 years to 1,779,000 ringgit in 2021 years as the reward and recall cost. So conclusion, the provision for liability and charges have decreased from 12,132,000 ringgit in 2020 years to 6,145,000 in 2021 years. That means the provision for liability and charges have decreased 5,987,000 50,000 ringgit. It is the negative proportion of 49.35%. Next, I will talk about the intangible asset. Intangible asset is one of the accounting standards. So you can look at this photo is also annual report for intangible asset. The company total cost have increased and the amortization have increased also. The overall cost is include the software and license. So you can look at the cost of intangible asset have increased from 9 million ringgit in 2020 years to 9,140,000 ringgit in 2021 years due to addition. Besides the amortization, software and license increased from 1,330,000 in 2020 years to 3,576,000 ringgit in 2021 years. Conclusion: the intangible asset have increased from 9 million ringgit in 2020 years to 9,140,000 ringgit in 2021 years. That means intangible asset have increased 140,000 ringgit. So it is the positive proportion of 1.27%.
Inventories. The cost of inventories of 69,632,000 consists of raw materials, work in progress, finished goods, and consumable stocks. The net realizable value of 2,051,000 and the reversal of write-down is 571,000. The inventories recognized as cost of sales is charged to the income statement amounting 790,965,000. Income taxes. IAS 12 prescribes the accounting treatment for income taxes. Income taxes include all domestic and foreign taxes that are based on taxable profits. The amount that is attributed to an asset or liability for taxation purposes is the asset or liabilities tax base. If a business will have to pay tax if it recovers the carrying amount of another asset or debt, then there is a deferred tax liability.
Part C, authorized share capital, directors' remuneration, substantial and substantial shareholders of the company. First is authorized share capital. The entire value of the shares a firm chooses to sell is known as the issue share capital. In other words, a firm may decide to merely issue a fraction of the total share capital with the intention of issuing further shares in the future. Second is the payout capital, the sum of money that shareholders have given a corporation in return for shares of its stock is known as payout capital. When a firm sells its shares to investors directly on the primary market, it generates payout capital. According to the financial statements, the total issue share capital and payout capital of Panasonic in year 2022 is 60746,000 ringgit, and the total number of shares in year 2022 are 60746,000 units. For the second point, directors' remuneration. Directors' remuneration means that the company's board of directors and shareholders must both approve any payments made to a director, which may be made in the form of fees, a salary, or access to the company's assets. According to the statement, the total directors' remuneration in year 2022 are 2,784,000 ringgit. The sum of 683,000 and 95,000, which is 778,000 was paid to the non-executive directors as fees and others. On top of that, salaries, bonus, and other remuneration, which is 1,841,000 and ringgit, and defined contribution retirement plan, which is 165,000 ringgit was paid to the executive directors in year 2022. Moreover, the total amount paid to directors increased from 2,681,000 ringgit in 2021 to 2,784,000 ringgit in 2022. The last one, substantial shareholders of company. A substantial shareholder is a person who owns one or more voting shares in business and whose ownership of those shares individually or collectively accounts for at least 5% of the voting shares in the firm as defined under Section 136 of the Companies Act 2016. Panasonic has a total number of 6 substantial shareholders, such as Panasonic Management Malaysia Sdn Berhad, Panasonic Holdings Corporation, Panasonic Holding Netherlands BV, Panasonic Asia Pacific Pte Ltd, Employees Provident Fund Board. Last but not least, kumpulan wang persaraan diperbadankan. As the statement shown below, Panasonic Management Malaysia Sdn Berhad has a direct interest of 28823,871 ringgit, and they have 47.45% of the shares but do not have deemed interest. However, Panasonic Holding Corporation, Panasonic Holding Netherlands BV, and Panasonic Asia Pacific Pte Ltd do not have direct interest, but they have deemed interest and have 47.45% of the shares. On top of that, Employees Provident Fund Board have direct interest of 8,081,646 and have 13.30% of the shares and do not have deemed interest. Finally, kumpulan wang persaraan diperbadankan has kumpulan wang persaraan diperbadankan has 3,462 and 3,462 and 800 ringgit of direct interest and have 5.70% of the shares, but they do not have deemed interest.
Hi, my name is Jun Ying. Today I'm going to presentation Financial Accounting Assignment, Section D, Analysis of Financial Statement, Income Statement, Horizontal Analysis. The first of using horizontal analysis is the revenue of the Panasonic Manufacturing Malaysia Berhad. This revenue has shown a negative percent. is 7.36%. The revenue from 2020 to 2021 have decreased up to 77,422,000, and the home appliances was decreased up to 28,032,000. The fan product has decreased up to 49,552,000. The second horizontal analysis is the profit before tax. The profit before tax in 2020 to 2021 also show the negative percents. They are 4.3%, and they total decreased to 6,076,000. Based on the Note 16, the depreciation of the years has decreased up to 932,000. The property plans, the equipment of the write-off has increased up to 242,000. The staff cost of the salary, the bonus, and other the employee benefits has decreased up to 1,550,000. The defined contribution requirements plans has increased from this amount to this amount in 2020 to 2021. Following to the Note 16, the provision of liability and charge has decreased up to 6,290,000, and the current provisions of liability and charge in 2020 years is 12,132,000 and decreased up to 6,145,000 in the 2021 years. So the total decrease is 6,145,000. The next horizontal analysis is tax expenses. As you can see this diagram, 2020 to 2021, that has increased 5,541,000. So based on the Note 17, the current tax expenses have increased up to 12,290,000. The different tax expenses have decreased up to 5,541,000. So in the tax of the Malaysia tax rate is 24%. They are same in the 2020 years and 2021 year. The tax effect of expenses has decreased up to 5,163,000. The next horizontal analysis is share of the result of the associated company net of the tax. As you can see this diagram, the share of the result of the associated companies has a massively increased from a negative 293,000 in year 2020 to 20,284,000 in 2021. So based on the Note 6, the net assets in interest in the associated company have increased 39,148,000. The last horizontal analysis is basic earning per ordinary share. The basic earning per share in the companies in year 2020 was around 192 cents. In 2021 was around 193 cents. The net profits of the financial year attributable to equity holder has decreased up to 535,000, and the average number of the ordinary share in the issue during the financial years has a same amount. There are 60,746,000.
Part E, Group Statements of Financial Position. This is the table for the horizontal analysis of Panasonic Company from 2020 to 2021. It shows the amount of increase or decrease for the financial position item, and this is the percentage for the horizontal analysis. The first item for the financial position is right of use asset. The right of use asset has been dropped from 6,109,000 in 2020 to 5,899,000 in 2021. It has a decline of 210,000. It shows a negative proportions of 3.44%. From Note 4, we can see that why the right of use asset will be dropped is because of the total cost decrease and the depreciation expenses risen. The total cost is include the leasehold land, buildings, machine, and equipment. The total cost will be dropped is because of the lower building cost. And the total depreciation amount risen is also shows in Note 4. Next, deferred tax asset. From the horizontal analysis, it also shows the deferred tax assets have declined from 12 million in 2020 to 11 million in 2021. It shows a decline of 1,655,000 for the deferred tax asset. So it shows negative proportions of 12.88%. For the note 7, it shows the reason why the deferred tax asset will be declined. It's because of the lower property, plant and equipment, provisions, and others. It shows a decline from 344,000 in 2020 to 73,000 in 2021. That met in the plant and equipment. It also shows the decreased figures from provisions and others. Next is inventories. The inventories has a decline from 73 million in 2020 to 69 million in 2021. It also shows a drop of 3,532,000 in inventories. It also a negative proportions of 4.83%. From note 8, we can see that the inventories will decrease is because of the less in raw material, work in progress, and consumables on hand for the company. It shows a decline for the raw materials, work in progress, consumable stores in the note 8 for the financial position. Next item is trade and other receivables. Trade and other receivables is rise from 74 million to 100 million from 2020 to 2021. It shows a rise of 29,291,000 in trade and other receivables. So it has a positive percentage of 39.09%. For note 9, it shows a rise in amount due from associated company, related company, deposit, and prepayments that lead the trade and other receivables to be risen. So the figure of the associated for the amount due from associated company, due from related company, deposit, and prepayments has been shown in note 9. The last item is trade and other payables. It shows a rise in trade and other payables from 136 million in 2020 to 148 million in 2021. The trade and other payables has been increased by the amount of 11,887,000. So it shows a positive percentage of 8.69%. From note 14, it shows why the trade and other payables is risen. It is because the higher trade payables and accruals, amount due ultimate holdings corporations, and the amount due to related companies. From 2020 to 2021, the trade payables and accrual grown from 95,388,000 to around 100 million. The increase of the amount for the ultimate holding corporate and the related firms is also shown in note 14.
So, based on all reports above, Panasonic Manufacturing Malaysia Berhad is worth investing in. Due to all kinds of circumstances and competitions on the market, the company is still able to maintain their net profit compared to last year 2020. The figure is not much different between both years. The company is able to maintain the net profit even though the pandemic hits and economic growth of Malaysia has been dropping. So this is the end of our presentation. Thank you so much for your time for listening to our presentation.